I made over $200,000 on Polymarket last year, and I want to be very clear about why I'm saying that right at the start. It's not to flex, it's not to impress you. It's because most people watching this genuinely do not understand what is possible with prediction markets right now if you stop guessing and start approaching this with a real process. And the craziest part is this wasn't one lucky bet. It wasn't one insane trade that just happened to work out. It was consistent, month after month. And that's the part people miss: consistency. I'm not a Wall Street guy. I don't have a finance degree. I didn't come from traditional finance. I've been in crypto since 2019. I've been trading prediction markets seriously for about a year and a half, and this is the most consistent money I've ever made in my life. That's why this video matters, because most people lose money on Polymarket, like badly. And it's not because the platform is broken. It's because they don't understand how this game actually works. So in this video, I'm going to break down how Polymarket actually works, why most people lose money, how Edge really works, how I personally think about these markets, and then I'm going to show you real trades and the exact process I use. And I'm telling you right now, this genuinely feels like early crypto again. It feels like one of those moments where the opportunity is obvious in hindsight, but almost nobody sees it while it's happening. If you're brand new, take a breath. Polymarket is not complicated. The mechanics are simple. You are buying either a yes share or a no share. That's it. There's a question like, will X happen by Y date? If you think it happens, you buy yes. If you think it doesn't, you buy no. The price you pay is the market's probability. So if yes is trading at 35 cents, the market thinks there's a 35% chance it happens. If no is trading at 65 cents, that's a 65% chance it doesn't. And when the market resolves, the winning side pays $1 per share. The losing side gets 0. So if you buy 100 yes shares at 8 cents and you're right, $8 turns into 100. That's a 12.5x. Simple. Two platforms matter right now: Polymarket and Kalshi. Kalshi has fees and lower volume. Polymarket has no trading fees and way more liquidity. Same market might have 2 million volume on Kalshi and 40+ million on Polymarket. So right now, Polymarket is where the real opportunity is. Now this is where things start to separate people. Most people who touch Polymarket lose money. Not some, most. And it's not because they're dumb. It's because they're guessing. They're reacting. They're hoping. They're treating this like gambling instead of trading probabilities. The first massive mistake people make is sports markets. I'm just going to say it. Sports on Polymarket is a donation. You are not smarter than Vegas. Those lines are insanely efficient. There is no edge there for retail traders. You're just picking teams and praying. The second mistake is mentions markets. Stuff like, what word will someone say in a speech? It's fun, sure, but it's a lottery ticket. There's no real analysis, no repeatable edge. And this brings us to the most important word in this entire video: edge. If you do not have an edge, you are flipping coins. Over time, you lose, period. So let's slow down and actually talk about what edge means, because most people use this word without understanding it. Edge means you are consistently making bets where the probability implied by the market is wrong in your favor. That's it. You are not trying to predict the future. You are not trying to be right. You are trying to buy mispriced probability. And that distinction is everything. Once that clicks, Polymarket stops feeling random and starts feeling mechanical. There are only a few real edges on Polymarket. The first is speed. You catch breaking news before the market reprices. If you're early, you win. If you're late, you're exit liquidity. The second edge is mispriced markets. This is my main strategy. This is when the market price does not reflect reality. Maybe people panic. Maybe they overreact to a headline. Maybe the market just hasn't caught up yet, but the price is wrong. And when the price is wrong, that is literally where money comes from. The third edge is arbitrage. It's rare, but sometimes yes and no add up to less than $1. If that happens, you lock in guaranteed profit. It's boring, it's mechanical, but it works. Now my favorite strategy, and this sounds dumb until you've been here long enough, is what I call nothing ever happens. Markets massively overprice chaos. People love drama. They love catastrophic outcomes. Headlines drop, Twitter explodes, people panic, prices spike, and then nothing happens. Over and over again. Once you've been here long enough, you start to see the same pattern repeat. Human psychology does not change. People overweight dramatic outcomes and underweight boring reality. And that gap is where money is made. Let me explain mispricing in a way that really drives this home. Imagine a market asking whether a company will have a major outage by end of year. Historically, that company has had 13 incidents this year. That's about 0.037 incidents per day. There are 17 days left. That implies roughly a 60+% chance of another incident. But the market is trading at 11%. That's not a little off. That's massively wrong. And when you see something like that, you don't need certainty. You don't need inside info. You buy yes because the math is on your side. And if you do that consistently across many markets, the law of large numbers works for you. Now here's where almost everyone still messes up. Risk management. You can understand everything I've said so far and still blow up your account if your risk management is bad. Never go all in. Ever. I don't care how confident you are. Position sizing is everything. Smaller positions, more diversification. You don't need home runs. You need to stay alive. And never revenge trade. This is huge. You will have losing days. When that happens, walk away. Revenge trading is how a bad day becomes a blown account. Now let's talk about the real enemy that nobody warns you about. Information overload. When you start trading these markets, you are flooded with noise. Headlines, tweets, hot takes, everyone screaming, buy, sell, it's happening, it's over. Most of it is noise. Most headlines do not matter. Most panic is fake. But when you're new, you don't know that yet. You react to everything. You chase, you FOMO, you panic sell, and you lose money. The real edge is not just knowing what to trade, it's knowing what to ignore. This is where my entire process changed. Instead of trying to manually research everything and still being unsure, I flipped the workflow. I start with the actual Polymarket bet. I find a market that looks controversial or heavily debated. I take a screenshot of the bet. Then I go to polysite.app, sign up. It's $1 right now, but that offer is only available until the end of today. And I go straight to the AI analyzer. I upload the screenshot. Then I let it work. The AI scans everything. News, official sources, Twitter, sentiment, real-time data. Every corner of the internet I would never be able to check fast enough myself. And it gives me a clear answer. Not vibes, not opinions, data. It tells me what's actually most likely based on everything available right now. I take that answer, go back to Polymarket, and enter the bet. Now here's the important part. After that, nothing else changes. Same position sizing, same discipline, same exits. Polysite doesn't replace risk management. It replaces uncertainty. Once you stop reacting emotionally and start thinking in probabilities, Polymarket becomes predictable in the only way that matters. Probabilities correcting over time. If this made sense to you and you want to trade prediction markets without guessing, check out Polysite. And if you want more deep dives like this, specific markets, full breakdowns, real trades, let me know in the comments. I'll make them. I'll see you in the next one.